All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our options midweek update. I typically like to do these during live market hours. That way we can take a look at where we stand on some of the key markets that we track. Today was just too busy. We had a crazy market here, a lot of big movement to the downside in many areas that we track. So I just wasn't able to get the live session going here today. So did want to get a video out talking through what's taken place so far this week, specifically in today's session, and how that impacts things for the rest of this week. Before we get into the charts, let's talk about the news events that we have upcoming. The big news of the week is going to be tomorrow after the close. We have a lot of the big tech names out with earnings. Apple, Amazon, Facebook, Google, a lot of those big headliners out with their quarterly numbers. The NASDAQ is going to have a very large reaction after those numbers are released tomorrow afternoon. I was expecting the market to be slower and choppier in front of that news tomorrow afternoon. But today we saw the COVID-19 headlines really pick up again, right? I mean, the numbers are increasing worldwide. We have some shutdowns that are now starting to take place over in Europe. It's only a matter of time before they try to do it again in the US. Markets sold off accordingly, right? I mean, we saw a pretty big move to the downside today. And what was interesting, we really never saw any type of attempt at a large bounce. It was pretty much strong selling from the get-go this morning. What we have seen previously here, if you go back over the last number of months, anytime that we've had selling, it only lasts for a few hours at a time. We get a buy the dip scenario and the market heads right back to the upside. Very interesting to see that did not take place today. There was certainly fear that came back into this market. Now, all of that could change in a hurry tomorrow. If the tech names release their earnings and the market likes the numbers, we could be right back to the upside. All that to say, it just continues to be an environment where you want to take it cautious. Right? You don't have to be a hero here. Go for those home run type trades. Now is the time to manage your risk, keep the risk small. Right? We want to be active. We certainly want to be taking trades, but we don't want to get into a situation where all of a sudden you've got 20% of your account at risk in one trade. We want that number to be down in that 2 to 5% range. We've also talked recently here in these sessions, we have been using a lot of vertical spreads. We're going to continue to do that. The volatility, the VIX closed above 40 today, indicating that options are very expensive. That's prime for the credit spread approach. We're going to continue to sell a lot of credit spreads right now. Number one, to take advantage of the higher priced options. But number two, to also give ourselves more forgiving type trades, just in case we do get more back and forth movement in here. The credit spreads give us 5 ways of making money on every position. I'll talk about that more in just a moment. I'm also going to continue to lean on the options that have between 20 and 40 days left to expiration. The weekly options, they're exciting. They move quick, but in this market, they're just too aggressive for my taste. I'm going to lean towards those monthly options here over the next week or two, especially until we get past the elections. I want to be more conservative here. Once we start to get past some of these news events, we can certainly ramp things back up. From a technical perspective, SPY, the last couple of weeks, we've been talking about how we've been cautiously bullish up until the last week or so, because we did start to see some of these key support levels broken, and they broke in a big way here today. We have been tracking the 50-period exponential moving average. It's that yellow line here at 337.50. That level broke. Not only did it break, I talked about how if that level does break, it would be a quick move down towards the 89 EMA. Okay, that's one of the blue lines that I have on my chart here. Not only did we test that level, but we closed below that level today. We saw some pretty nasty selling. And SPY today, down over $11, 3.5% on the session. And not only did we break those levels, look at the volume. I've talked also recently in these sessions about how we want the volume at 100 million shares. We saw 126 million shares trade on SPY. There was very much conviction behind the move today. It was also pretty broad-based selling. If I go back over to the internals here, you will see that the advanced decline line on the NASDAQ minus 2,600. When you see a number like that, that's pretty much every name in the NASDAQ moving lower. There was very few pockets of strength today in the NASDAQ. And over on the NYSE, if I switch the symbol here, the NYSE, it was minus 2,500. These are pretty nasty numbers on the downside. Normally on a trending day to the downside, we'd want to see minus 1,000. We are minus 2,500. I mean, this was pretty impressive selling today. Volume ratio is very nasty. All of the volume was on the downside today. And we had a whole cluster of minus 1,000 tick readings. A minus 1,000 tick reading indicates that we have a pretty strong sell program in place. Okay, and I have it loaded up. I have the tick on a 15-minute time frame. Look at how many 15-minute bars had minus 1,000 tick readings. It was sell program after sell program today, and that's a very different story from what we've seen over the past number of months. Okay, very telling that we saw a run for the exits here today, and it'll be very interesting to see what happens here over the next couple of days. The catalysts are there, certainly, for a recovery if the tech names decide to take the lead again tomorrow afternoon after the earnings come out. We could certainly see this thing zoom right back to the upside, but it's very, very impressive to see what the bears were able to do market wide today. The range, I've also talked about the ATR, the average true range, which is the indicator down at the bottom. I've talked about how it's been impressive so far for most of this year, but we have seen this start to come down here in recent sessions. Now we're starting to see it uptick again. Okay, good to see that uptick back up towards 6. I want the range to stay active, right? We want the activity. We want the volatility as options traders, and we got that today. Again, with the VIX above 40, that just opens up the playbook. There's a tremendous amount that we can do on the option side. So where do we head from here over the next couple of days? If we get any type of a lower open tomorrow, that could definitely open up another wave, another air pocket down towards the 200 period moving average, which is down around 319. That would be a very, very strong area of support if we do get down and test that level. If, however, we do get another round of buying, if they buy the dip again the next few days, all of the moving averages that we just broke through over the last couple of days on the downside, those now all become areas of resistance. So now anywhere from 329 up to 337, we've got an area of resistance there. And then you've got another section of moving averages from 337 up to 342. Those were going to be areas of resistance should we get a recovery here over the next few days. So now definitely, I mean, if you take a look at price action, you definitely have to be leaning in the bearish camp here just based on technicals alone. But that changes over the next few days. If we start to see some price action back to the upside, we'll talk about that more on Friday, see if that changes our outlook going into next week. But definitely leaning in the bearish camp here, just based on what we've seen the last couple of days. Let's go over to the 195-minute charts. The daily chart that we just took a look at is really there for me to take a look at overall market big picture. I'm not using that daily chart to trade off of. I'm not using it for entry or exit points. I use it to base my opinion on how aggressive I feel comfortable being. How big of a position size do I want to take? Am I using long calls, long puts, or am I using vertical spreads? Am I using weekly options or monthly options? That daily chart and the internals help paint a picture for me on how aggressive I feel comfortable being. I take that outlook and then I go over to the 195-minute chart, and these are the charts that actually guide my entry and exits. All right, so on the 195-minute chart of SPY, you can see going back into last week, we had already started to see this market give it up a little bit. Right? We had talked about how that 50 period EMA, it's that yellow and white line right here. We held it as support a couple of times and that level broke. Okay. It broke back on Monday and we have seen decent selling ever since. Okay. It's been a really nice move to the downside here. We talked last week about how if we broke that 50 EMA, we would definitely be interested in a bearish outlook on SPY. And that outlook has certainly paid off on the downside. Where does that leave us here in the near term? The system is still on a short trade. The stop has been moved down. The stop is initially up at our upper series of pink dots. See how today those dots started to move down? We're starting to move that stop down, reducing risk and eventually locking in some profit. So my stop on the short side, it'll continue to move down tomorrow as well, but my stop has been moved down to 342.62. Notice also that our pulse indicator, it's this red and yellow histogram right here, started to plot yellow. What that indicates, when it starts to plot yellow like this, it indicates that price is between a 1 and a 2 standard deviation channel move on the downside. That does not mean price has to stall out and move to the upside. It doesn't mean price can't continue to head lower. It just means that we're nearing an exhaustion point. We're nearing an oversold condition in the near term. When you start to see a series of yellow bars on the pulse indicator, I typically look for 3 out of the past 5 bars plotting yellow. That indicates an oversold condition where price action will typically start to get into a sideways consolidation phase or even a reversal in the other direction. In this case, a reversal to the upside. If we get any type of further selling over the next few days, that would have me interested in putting on a neutral to bullish trade that would benefit from markets finding some support in here and moving to the upside. Specifically, selling a put spread would be my trade of choice in that case. I can't do it yet because I only have 2 yellow bars. I just wanted to point it out that we're starting to get some oversold conditions as of this afternoon, and that could potentially open up the door over the next few days to sell a put spread. Why would I sell a put spread versus buying a long call? Selling a put spread would give me 5 ways of making money on the position. If I buy a long call option here, it's like holding a ticking time bomb. It can work, but SPY better move to the upside in a big way, and it's got to do so quickly. I'm not that confident that that's going to happen. I could see further chop. I could see a further move to the downside. If I'm going to lean bullish here, I'd rather do so in a more conservative route. And that would be through taking a short put spread versus a long call. Okay, so not going to do anything with that here at this point. I still need to see a one more round of selling. I need to see at least a third yellow pulse bar going into the next few days. So still leaning bearish here, but the potential is there for a shift over the next couple of days from a bearish outlook to more of a neutral to bullish outlook. QQQ, this is the NASDAQ ETF. Very similar story to the S&P. We've had a nice move to the downside here so far this week. We had held that 50-period EMA all of last week, that yellow and white line there. It had held for a couple of days last week. It broke. Monday it broke, and we have seen some follow through specifically today. The NASDAQ QQQ down almost $10, 3.5% on the session. Just like SPY, we did start to get some yellow pulse bars in here. We're oversold in the near term. Doesn't mean QQQ has to bounce immediately. It just means that we're at a point now when we start to see these yellow bars plot. I mean, you can go back to see when's the last time we saw those yellow bars on the downside. Well, it was back here, end of September, and look what happened. Right? We chopped around and down towards the bottom of this move, and then we reversed to the upside. We've seen these patterns repeat over and over again. So looking at price action, yes, we're still leaning bearish after this break to the downside today. However, if we start to get a third or fourth pulse bar plotting yellow tomorrow, that would shift my focus and have me interested in potentially selling some put spreads. See if we can get any type of a bounce to the upside aided by some of the tech earnings that are out tomorrow. IWM, the Russell ETF. This is the Russell 2000 ETF. Again, same 195-minute chart. All of the index products are moving in tandem with each other. Doesn't happen all that often these days. We have seen so many times where we get this rotation between the index products, but in this case, everything's moving to the downside. And IWM also had a nice move lower today, down about 3%. Also giving us 2 yellow pulse bars. Over the next couple of days, if we get any type of a lower open tomorrow or even on Friday, that would have me interested in selling put spreads on any or all of the index products. Okay, so they're all leaning cautiously bearish here, but the potential is there for a reversal over the next couple of days. Some of the individual stocks on the list. Let's take a look at Netflix. All right, you take a look, you start to have, some of these shutdowns pop back up again. You take a look over what's happening over in Europe. If we start to see some additional shutdowns here in the US, Okay, obviously, some of these stay-at-home names like a Netflix or a Zoom, Peloton, all of these names that benefit from everybody being stuck at home. Obviously, the potential is there for another push to the upside. Netflix, going back to its earnings release, we have seen a sell-off from around 575 all the way down to around 480-ish here yesterday. It's been a pretty nice wave to the downside. What I'm looking at here for the next couple of days is look what the pulse did down here at the bottom. Over the past 10-ish so candles on the pulse, look at all of these yellow bars, indicating that price action is between a 1 and a 2 standard deviation channel move on the downside. We're oversold. Look what's happened to price since those bars started to plot yellow. See how we just have started to chop sideways here? We've seen this coiled spring pattern develop. We know that Netflix does not like to stay quiet for long. Out of this move, we will get a pretty nice breakout. We don't know when that's going to happen, nor do we know if it's going to happen to the upside or to the downside. Based on what we're seeing here with the pulse being oversold, it has me looking towards a potential break to the upside. How would we play it here? Let's go over to the trade page. And let's switch the symbol to Netflix. And let's take a look at the November monthly options. I mentioned here a few moments ago, I am leaning towards the options that have between 20 and 40 days left to expiration. The November monthly cycle, those options have 23 days left. Those are going to be the options that give me the best liquidity. Yes, you can take a look at some of the weekly cycles. Just know that on many of these expensive tech stocks, they just don't have near the liquidity in the weekly options that you'll see in the monthlies. So I'm going to stick with the November monthlies. Could I come in and just buy a long call option expecting Netflix to move to the upside? Sure, I could. The problem with that approach is when you buy a long call, you only have one way of making money. Netflix better move to the upside and it better happen quickly. I don't want to be that aggressive here. I want to be more conservative. Selling a put spread still allows me to lean bullish, but it allows me to do so with a trade that gives me 5 ways of making money. Let's talk about it. Let's go over to the out of the money puts. The put options are on the right-hand side. I am going to go to the 460 puts. I'm going to the 460 puts because they have a 65% chance of closing out of the money. When I sell a credit spread, I want these options to get as cheap as possible. The goal here is to sell high and buy low. I'm trying to sell the spread high to open the position, and I'm going to try to buy low over the next week or two if we get a stock move to the upside. So let's go ahead and right click on the 460 put, go to sell and go to vertical. It's going to pop up an order down at the bottom where I am selling the 460 put and buying the 455 put at the same time. I'm buying that 455 puts to give myself a risk-defined trade. If all I did is just sell the 460 put, I'm taking undefined risk. It's going to tie up a tremendous amount of capital. By using a vertical spread, it allows me to put on a neutral to bullish trade with a fully risk-defined position. Now, the mid price, it's currently trading for $1.22. I know markets are closed here. We'll take a look at this one again here tomorrow. But if we get filled at $1.22, it would leave me with a situation where I'd be risking 378 to make 122. Not thrilled with that ratio. Ideally, I would like to be closer to a risk 2 to make 1 scenario. Anytime you use a credit spread, you're always going to be risking more to make less. That's just the nature of a credit spread. I'm okay with that because I've got 5 ways of making money. It's going to give me a very high winning percentage over time. I can make a risk 2, risk 3 to make 1 scenario. I can make that work numbers wise. I can't make risk 6 or 7 to make 1. I can't make that work over time. Well, this ratio, it's a little light. Okay, I'm just not able to collect enough premium to give myself a decent reward to risk ratio. So I'm going to adjust these strikes. In order for me to collect more upfront to put this trade on, I'm going to have to move my strike prices closer to the current stock price. I'm going to move my 460 put up to 465, and I'm going to move my long put from 455 to 460. Now I can collect $1.52. Okay, now I'm risking 348 to make 152. Now I'm in a better ratio between risk 2 and 3 to make 1. So the $152 that I collect to put this trade on, that's the most I can make on the position. The $348, that's the most I can lose. If I am dead wrong on this position, the most I can lose is $348. The reason I love the vertical spreads right now, if you guys, you can take a look here. I mean, if I come in and take a look at buying a call option for a bullish trade on Netflix, if I go in the money, you're potentially talking about between $2,500 and $3,000 per contract. They're expensive. The volatility is high right now. That's what I was talking about earlier. With the VIX over 40, the options are very, very pricey. But by using the vertical spread, I'm able to lower the cost down to $348. Much more reasonable for the smaller account size. I continue to get emails from people asking, hey, Mike, can we trade the smaller price stocks? I've got a smaller account size. I can't afford to put $3,000 into a call option on Netflix. Well, here's a bullish position that you can take on Netflix for $348 of capital. Okay, very reasonable trade regardless of account size, and it gives us 5 ways of making money on the trade. I make money if Netflix moves up, down, or sideways. I don't care as long as Netflix stays above 463.48. That's my break-even point right there. The price of Netflix is at $486. Okay, I've got $24 of cushion here where I can be dead wrong. Netflix can move lower by another $24 and I'm still okay. The only move that hurts me is a big move lower from here. And even if that does happen, the most I can lose is $348. Okay, so any type of a move to the upside and we're okay on Netflix. We also make money as time decay adds up. Every day that passes, that helps us. And we make money if volatility decreases. So that does give us 5 ways of making money on the position. So that's a trade that I'm looking at for Thursday session. If we get any type of a higher open, you can see the futures after hours here are definitely higher. So if we get any type of a higher open, definitely looking for names like Netflix that are a little oversold here, potentially as a bounce opportunity over the next couple of days. All right, let's go back over. Let's take a look at Oracle. Everything we just talked about on Netflix is true on Oracle as well. Oracle has had a really nice move to the downside. We are now looking at yellow bars on the pulse indicator. And this afternoon, we just got a green bar as well. The green bar on the pulse indicator indicates that price is between a 2 and a 3 standard deviation move. We're even more oversold than what we saw over on Netflix. It has me looking for a potential bounce trade on Oracle. Another potential short put spread opportunity. So everything we just walked through on Netflix can be true on Oracle here as well. Why am I not talking about buying long calls here? Because price action hasn't confirmed yet. I don't want to be that aggressive on the upside. I'd rather lean more conservative with these credit spreads. They tie up less capital. They give me a higher probability of success. Those are the types of trades that I'm looking for in the near term. The financials definitely have been weak. We have not had any type of significant movement to the upside on the financials, but here's JP Morgan. Notice starting to see a trend here on many of the products that we look at. We are oversold on the pulse. Has me looking for potential support levels over the next few days. Again, I'm not saying, guys, the bottom is in. I'm not saying the market's going to bounce immediately. I'm just saying we're nearing some points that historically, when you hit these types of levels, historically they have held. And historically it has led to some price action on the upside in the near future. So has me looking at JP Morgan or Bank of America, some of these financials, looking for some signs of life here going into the next couple of days. Not interested in buying long calls yet because price action hasn't confirmed, but on all of these, the pulse indicator is yellow, opening up some short put spread opportunities for us. So again, Bank of America, very similar story. Hitting some levels that are of interest to me over the next couple of days to see if we can get some bounces to the upside. TLT, we've talked about bonds here in recent sessions. TLT has had a nice push to the upside. Okay, off of the lows. Look what happened. Anybody surprised at this point? We saw the yellow bars on the pulse indicator last week. Look what happened since those yellow bars plotted on the downside. We got oversold. Price action reversed back to the upside. Last week, we sold some put spreads on TLT, expecting the bounce to the upside. That's exactly what's happening. And we're actually approaching some potential target levels on our short put spread. So that trade has worked out really well. We also have our trend strength indicator flipping from red to blue, indicating that bullish momentum is taking over. The opportunity is here. If you wanted to add in a long call position, you could do so. Price action did briefly break up above the 50 EMA, that white line today. If we get back up above that line over the next few days, it would have me interested in a potential TLT long call position. So the short put spread from last week working out really well for us. Obviously, we want to see some continuation to the upside here over the next few days. Let's talk about Apple and Amazon here for a brief moment, because they all have earnings out tomorrow afternoon. I've talked about that. How would we play it? Am I looking to put on a position going into Apple earnings? I am not. I do not like to hold positions through earnings in most cases. There are certain cases where I'll sell a credit spread into an earnings release, but holding long calls and long puts, I'm not looking to do so for a couple of reasons. Number one, the volatility is incredibly high. The market makers are pricing in the uncertainty due to earnings tomorrow afternoon. The options are very expensive, and what they're going to do is as soon as those earnings are out tomorrow afternoon, they're going to suck the volatility right back out of the options, and those options are going to lose value. In order to make money with a long call or long put going into earnings, you need to have a directional move in your favor that's big enough to offset the volatility contraction. That's why it's more difficult to make money around earnings. So not interested. If I go over to the trade page on Apple, what you'll see here is at the top of the trade page inside of the Thinkorswim platform, there's a yellow number up at the top next to the 3Ms. Those 3Ms stand for the market maker move number. That number is telling you what the market makers are pricing in to the options in anticipation of the earnings coming out. In other words, they're pricing in a $4 move higher or lower tomorrow afternoon solely because of earnings. That's already being priced into the option. So if the move ends up being smaller than $4, even if it's a $2 move to the upside, you're not guaranteed to make money on a long call position. You need that move to be bigger than what the market is expecting. It needs to be larger than a $4 move to really make a nice return on any type of a bullish position. All right. So there's just a lot that has to go right in your favor to make money around earnings. Just not interested in that approach. I mean, if we take a look, the volatility, it's actually not as high as what it typically is going into an earnings release, but we still have the implied volatility in the weekly options around 82%. That number is going to contract down to around 50% over the next couple of days after the earnings come out. So they're going to suck the volatility out. And I don't want to get caught by that volatility contraction. So the chart pattern definitely leaning towards the bearish side here on Apple. The problem with earnings is you basically throw the technical patterns out the window because everything depends on what the earnings look like and also what the forward guidance looks like as well. Same story on Amazon. This is a very typical pattern. What we've seen the last week on Amazon, we've seen false breakouts in both directions. We had a false break to the downside. We have now seen a false break to the upside. Very typical going into earnings season that you're going to see chop kick in. That's why I have avoided trading Apple and Amazon, Facebook, Google. I haven't traded any of them here over the last couple of weeks because I am trying to avoid the earnings that are upcoming. Once those earnings are out Thursday afternoon, Friday, and even into next week, they're all fair game again. I'll jump right back in and throw them right at the top of our watch list. And we'll cover those here in the videos upcoming here Friday for our weekly recap and then next week as well. All right. So again, as we wrap up the midweek update, what is my outlook for the next couple of days? Based on price action that we're seeing, price action is certainly leaning bearish, but we are reaching some levels now that could be of interest. If we start to see some support levels hold over the next couple of days, we have a lot of names that are poised for some bounces higher. The names that I talked about here today are at the top of my watch list for that type of an outlook. Tomorrow afternoon, very, very important what the tech names do. The tech earnings to definitely be that catalyst to give us that quick recovery, or if the market if those earnings disappoint, that could be the catalyst to give us that move down towards the 200 period moving average on SPY, which is what we talked about at the beginning of today's session. So We'll definitely be watching things closely here tomorrow, specifically tomorrow after the close, to see what those earnings look like. I'll jump back on Friday. I'll jump back on to hopefully during market hours. I apologize for not doing this one today during market hours. It was just too busy of a session to jump on live. But I'll jump back on Friday. We'll take a look, see what those earnings end up doing for the market, and see what we're expecting for next week. So if you have any questions on any markets that we've taken a look at here today, any of these trades that are setting up for the next couple of days, feel free to post a comment here. You can always email me directly, mike@netpicks.com, or leave a comment inside of our YouTube channel or the Facebook group as well. All right. So if you have any questions, go ahead and get those in now. Otherwise, I'm going to wrap up for our session today. We'll see what happens going into a very active end of the week. Enjoy your evening, everybody. And I will talk to you all again on Friday for our weekly recap.